Hi everybody, thanks for being here again. This is Bob Iacchino from Path Trading Partners. My co-founder Mike Arnold is here as well. We've got what is both an interesting webinar today. It's somewhat generic. It's not necessarily Nadex specific, although it is very important to those of you who want to trade at Nadex. And it's something that in our combined 20 some odd years of mentoring and teaching traders, we've found to be one of the biggest hurdles to get our traders to jump. One of the things that we try to explain, and it's kind of our passion, is to get people to understand that trading is actually a trade, that it is actually a job. It's something that you put work and time into if you want to take it seriously, if you want it to be something that you can be successful at, just like any other trade. And what we're going to cover right now is going to seem like a lot of work, and I'd be willing to bet that more than half of you will just dismiss it and say, I don't need to do that. But remember that there are a lot of components that go into a trade, and there's a lot of trades that go into a day or a week or a month, and there's a lot of different situations that these trades happen in. And without an actual plan as to what you're going to do in the conceivable situations that you're going to come across, you're going to struggle. You're going to struggle. If you think you can do this without a trading plan, just think about how often you've gone to the grocery store without a grocery list, and how many times you've gotten home and said, you know, darn it, I forgot the fill in the blank, whatever it was. Think about the amount of times you've had a to-do list for the day that you have not written down, and how many times you've forgotten to do that one key thing, or you walked into a room and you grabbed 3 or 4 things and missed the one thing that you actually came into the room for. Now imagine all the different scenarios and components that go into trading, and see if you can actually explain to yourself how you could possibly be successful without a concrete trading plan. So that's why we decided to do this one for you guys, because as simple as the North American Derivative Exchange makes trading simple and affordable, it is still trading, and you're trading options. And that's another thing we've stressed in prior webinars. So you actually are trading. You're trying to become a trader. You're trying to augment your income, or make enough money to take an extra vacation, or pay off a particular bill, or potentially replace your job with trading. So at the end of this webinar, those of you that run off and work on a trading plan and take it seriously, you're the ones that are serious about trading. The rest of you that think, those guys are nuts, I can just wake up in the morning and trade, let me know where you're at in about 3 years in your trading. So let's go into this, but before we go into this, we do what we always do, which is, again, another very serious thing that a lot of people gloss over, is a risk statement. Notice we call it a risk statement and not a disclaimer. We're not trying to absolve ourselves of any risk or any culpability. We're trying to explain to you facts in a risk statement. And those facts are, this presentation is for information purposes only and does not constitute investment advice, nor an offer, solicitation, or recommendation to acquire or dispose of any investments or to engage in any other transaction. This presentation is not intended for solicitation purposes, but only for use as general information. All descriptions, examples, and calculations contained in this publication are for illustrative purposes only. The risk of loss in trading can be substantial. You should therefore carefully consider whether such trading is suitable for you in light of your financial condition. Past performance is not indicative of future results. So real quick, who are we? Well, we're a trading and education firm, and our mission was to form a firm that educates, supports, and backs traders who are committed to probabilities, discipline, and long-term trading success. That long-term trading success will in part be decided by whether you actually go through with creating and writing a trading plan. This is achieved by following the correct path. We are not high-frequency traders, and we are not day traders. We are a firm that believes in a long-term success in trading, covering time frames dictated to us by products, markets, and price action. Mike Arnold, I kid around all the time when I introduce him. I call him basically a professional devil's advocate. That's what he is. He's a 24-plus year market veteran. He's been teaching traders online and in person for over 10 years. Mike is still and has been a strategy and development consultant to multiple hedge funds. That's where the devil's advocate part comes in. A hedge fund develops a strategy, and then they send it to Mike, and they hire him to break it, to find the problems, to find the holes in the strategy. That's where the professional devil's advocate comes from. He's a former options market maker on multiple exchanges, and he has traded in Chicago, New York, Switzerland, and Canada. He is also the current head of technology and trading systems development for Path Trading Partners. That is me in the top right there with Becky Quick. I've spent the last 24 years in the commodities, futures, and forex markets, and I've been teaching and mentoring traders both online and live since about 2002, and I've mentored over 5,000 students to this point. I've been an analyst, a prop trader, and a fund of hedge funds principal and member of the investment committee. That is where I provide value to you. I've seen many trading systems and many statistical sheets on traders, and that's where my strength is for you guys, is to find where things are wrong with particular styles of trading. I've appeared on all of the different news channels, and I still do. I've done over 700 interviews on television, radio, on economic, political, and market-based topics, and I continue to make media appearances about 5 to 10 times per month. I want to turn it over to Mike. It's a little bit different. Normally I ramble on for a little while, but I'm going to turn it over to Mike here for a second to go over the first few slides, and I'll be back to talk to you guys after.
All right. Thanks, Bob. Thanks for the great introduction. Since now everybody can hear from the professional devil's advocate. So, all right, guys. I don't know if you saw our prior class. I think we did a few weeks ago. We looked at a number of ways the brains can fool us. It should be up there on the Nadex site. Bob has listed it here in red, so you can go watch that replay. We did that one first because it really shows a lot of the ways the brain distorts, deletes, generalizes, does things like change awareness and changing what you think you're seeing versus you're seeing. The lizard brain, which is where a lot of key decisions are made. It's the base part of the brain, and it makes fear and greed decisions, and it bypasses the neural cortex, which means it bypasses the thinking part, which is not real good. And what we found with a lot of traders, you know, they get into real extreme risk-reward, greed situations, fear situations, and essentially the lizard brain, the base brain, kicks in and starts making the decisions. And they're not really thinking about stuff anymore. They're just sort of reacting. We looked at asymmetric risk and reward value structures, and we learned about building a solid foundation for trading, which is a trading plan, and why it's so important to have a trading plan. Because without the plan, without a clear roadmap, without the clear target, without stuff that you can, first of all, reference, you know, without your essentially business plan being written down, if you keep reverting to these other aspects of the brain, if you distort, delete, generalize stuff, if you revert to the lizard brain, and you have no solid foundation from which to really establish your trading business from, it's probably not going to work out real well in the long term. So that's why we started with the trading plan and why it's a necessity for you to build one. Well, the natural follow-up question that a bunch of people ask is, well, how do I build one? What do I put into it? What do I do with it? So that's where we're starting with this one, and then next week we'll be continuing on this. We also went into the concept of feedback loops. All right. It's easier to explain a feedback loop. A feedback loop is an engineering term, but it's present. I use it in terms of teaching traders, working with traders, and showing them why they need their trading plan, which is the central part here, but then how they use their trading journal and trading log, and we'll get into that next week, and how they're following their trading plan, they're executing their trades, and they're using this information from their trading log and their trading journal to go back to update their plan, to figuring out what they're doing well, what they're missing, what they're doing not well. There's two kinds of feedback loops. There's a positive feedback loop and a negative feedback loop. When I say positive, it doesn't mean positive in the sense that it's better. It means positive in the fact that you're doing something you need to reinforce. You're taking a correct action. So you might notice something through certain trades. Hey, I followed my steps exactly for my strategy, and you know, great, and I was, I was calm, I was collected, versus a negative feedback loop. And again, this is not negative. It means something you have to subtract from your behavior, or something you have to remove. Like, I stopped following. I got worried about that I was going to lose profits, so I exited the trade early before it went to target. And you see yourself doing that repeatedly, and now you've skewed your reward to risk. That's something through your trade log and trade journal that you're going to have to address, and there are steps you're going to have to put into your trading plan and actions you're going to have to take so you can avoid doing that in the future. So those are the two kind of feedback loops, the positive feedback loop and negative feedback loop. But if you don't have your trading plan, and then you don't do a trading journal or a trade log, you have no way you're going to establish these feedback loops. You have no even basis for foundations. So that's why the trading plan is so important, because it's not a one-time document. It's not a document. Most people say, I'm just going to write a trading plan, then they file it away, like it's something on a checklist. The trading plan is something for you to reference daily, weekly. It's going to evolve with you as a trader. When you learn new things, when you start to trade new markets, when you start to learn new strategies and refine your strategies. Maybe some strategies you learned initially, you realize they're not really in sync with the kind of trader you are. So you take them out of your trading plan. You're going to learn new strategies. You're going to even modify strategies. You're going to make strategies you learn from other people, and over time you're going to master them and then make them your own. Because that's what we see. The really successful traders over time have started with something really solid in their trading plan. They haven't even learned strategies from other people. They find some that work for them, and then they've made them their own, and they've evolved their trading plan, and now it's becoming like a master tradesman. Okay, you don't start, if you're a carpenter, you might be an apprentice carpenter. You don't start off as a master carpenter, a master craftsman. And then even if you're learning carpentry, you might figure out what niche you want to be in. Do you want to be a cabinet maker? Do you want to make furniture? What's really your aspect of carpentry? And then over the time, as you do it repeatedly, and then you're going to, as you become a master carpenter, have techniques, have a skill set, have a vision that makes it your own. And all that's going to evolve. And then maybe even you open your own, woodworking shop or cabinetry shop. And then you definitely need that business plan, that trading plan, to keep evolving your business as you grow. So one of the things we say is you can't hit a target you can't see. All right? So if you can't see the target, there's no way you're going to hit it. And you can't see a target you do not have. So if you don't even have a target, there's no way you're going to even take the next step of attempting to see the target if you don't have it. The trading plan is the target. All right? It's the first step. So let's get back to the original point of this. What goes in a trading plan? We've spoken to many different people. We've spoken to thousands of traders. We've dealt with thousands of traders. We've run trading desks where traders were required to have trading plans. So we know a little bit about this. Different people have different ideas of what should go in a trading plan. Personally, we believe that if it's too complex or complicated, the trader will either not write a plan, start on a plan and not finish it, or just abandon the plan and ignore the important concept of the feedback loop. We're not going to sit here and tell you to write a 100-page document. It's not a thesis. It's not something, if we make it overly complex and initially make it daunting, most people, as Bob said, probably aren't going to do it anyways. But the few dedicated, the ones who really want to learn to trade and really evolve their trading career are. But then if you make it overly too big a deal and it's overwhelming, it's just going to maybe have a few more people drop off and not do it or not finish it. So we're going to start it simply, and then you're going to build on it over time. It's a work in progress document. It's a living document. It's a growing document. So the trading plan is a business plan for operating your trading business. If you were opening a new business, you would need some kind of business plan for how the business was going to operate. The business plan would be an absolute requirement if you were attempting to secure outside funding or a loan. Think about it. It doesn't matter if you want to open up a restaurant or a coffee shop or a car repair center, it doesn't matter, or a plumbing business. If you go, I go to a bank, I want a loan to open this up. They're going to ask for, they're going to vet you, but one of the things they're going to ask for is, let's see your business plan. Let's see your numbers. Let's see what you've put down, so we at least can maybe verify you might be successful before we're just going to give you money. So you need that. So this business plan would encompass everything you will need to operate your business successfully, whatever that business is. Your trading plan is similar to a business plan, but geared towards your trading business. Your trading, even though you might get to sit at home and do it even part-time to begin with, it's still a business. You've got to treat it like any other business if you want to grow it and be successful with it. That's what the trading plan is. So in the first section is the goals section. So if you're starting a new business, you will have goals surrounding what you want to accomplish with the business. The first section of your trading plan will have your trading goals and objectives. Remember, you can't hit a target you can't see. So you're going to have short-term goals, maybe 1 to 3 months out. And you're going to have longer-term goals, 1 year. We're not even talking about, you don't put down 5-year goals. I mean, even a year for a trader is a long time. You know, I want to have a 10-year goal or a 5-year goal. Stick to the shorter term and then a longer term. We'll get into the difference between a trading journal and a trading log, especially next week. We'll tune into that. Let me develop what's in the trading plan first, because if you don't have that, you're not going to understand what components go in a trading journal and trading log. And we'll get into some of that a little later. So, make your goals realistic. It's not, I'm opening up a $500 account and I'm going to turn it into $100,000 in the next 3 months. That's not a realistic goal, okay? I don't care how good a trader you were, unless you were just gambling it and, you know, I'm going to take all the money and put it on every trade and just hope I hit a string of 20 trades to get there. That's not realistic. It's got to be realistic. If you can only trade part-time, that goes in your plan. You know, you might have goals of, I'm going to start with a $1,000 account in the next, first I'm going to get to a point of breaking even and keeping the account balanced. You know, then it might be I'm going to grow it slowly. That $1,000 account might turn into $2,000 in 6 months. That could be a realistic goal for you. But to say 1,000 to 100,000 or something, or I'm going to make $10,000 in the next 30 days with a $100 account, not realistic. As you develop as a trader, you will be refining your trading goals. This is when the point that's going to be continue to go. You're going to have, as you get better and better, of course you're going to have new goals. And they might not be goals just financially. They might be goals of, I'm going to learn to trade other markets. Maybe I'm in binaries now, I'm going to learn how to trade Nadex spreads. I'm going to add a new strategy component. Maybe I'm trading the two and add in a weekly time frame, et cetera, et cetera. Those are other kinds of goals you can add in. Your short-term goals may change monthly for the first few months as you grow and develop. That's why we really have your short-term goals 1 to 3 months, because as you first get started and you're going to learn what you don't know, you're going to realize things through your own education, through trading, through learning from other people, and your goals are going to change more rapidly than when you're an established trader. So you're going to be updating them more often. We have a trading plan logistics section. So what's in the logistics section? The section contains information about your trading environment. Information about your trading environment will go in this section, like your location. Are you know, some people don't trade at home, some people do. What equipment are you using? What equipment are you, maybe you are just trading on a laptop now, but you want to get a second screen. Maybe you want to get a dedicated trading computer. Maybe you have something now and you have some things that are on your wish list that you realize you've needed to make it a more official career. It's going to have your trading account information and contact information. What do you do in case of a trading emergency? All right? What if your internet goes out? What if your power goes out? What if you have open positions on? Do you have all your account information and who to contact? You know, maybe you can't get to it over the internet. Maybe you have to call somebody and say, I need this trades closed out. There's some kind of emergency. You know, you should have that in your trading plan, because the last thing you want to do in a situation like, okay, I lose power or I lose internet, even I have backup internet and backup power stuff, but I've had it all go out. And I've had to call up my various different accounts and the firms that manage my accounts and say, okay, I need these trades. Maybe not my necessarily longer trades like my daily swing trades or my weekly trades, but intraday trades. I need to close them out because there's no way I can monitor them. I will have to verify if I do have stops, if my stops are properly there. So if they trade at those levels, my trades get executed. I have to verify all that. The last thing I want to be doing is running around trying to figure out who to call and being in a panic about what to do because there was a situation. It can contain information on what you currently have and also things you need to get as you grow as a trader. All right? So you can put all those things in the logistics section. Another important, often overlooked component is the hours of operation of your trading business. I mean, there's a lot of places you can trade, including Nadex, which you can virtually trade 24 hours a day. But we're not always going to be 24-hour traders. And it's not just, oh, it's 8 p.m. at night, I'm bored, I feel like putting on a trade. That's probably not the best way of running your trading business. You might say, okay, I'm part-time, I can do it from 8 a.m. to 11 a.m. every day. Put it down. And here's what I'm trading, and we'll get into it. Here's the markets I'm trading, here's what I'm doing. Those are things, because we see a lot of people that don't treat trading like a real business, and they're just walking from their computer. Let me see if I can find a trade right now. I'm bored. I don't know what to do. Let me see if there's a trade. That's not a really good way to run a business. It's not like you'd unlock your coffee shop that you're starting at 3 a.m. just because you felt like opening it to see if anybody wanted a cup of coffee at 3 a.m. because you were bored. That's not probably a good idea, way to run a business either. So if you just open a new business, you would have hours when you were open. It's the same for your trading business. What hours are you going to be in your trading chair? This will be very different if you were just trading the daily charts or a 5 or a 15-minute chart or a 20-minute time frame or a 2-hour time frame. It will be based on what sessions you are trading. Okay, maybe you work all the time and you do some trading in the foreign exchange markets, whether it be through Nadex or anybody else, and you say, all right, I'm trading the Asian session, or I'm trading the European session. I actually take a nap and then get up at 1 or 2, and I trade the busy time when London opens. It will be based off what sessions you're trading. You have to understand that and how you're really structuring your business. You will also need to assess if it is realistic. Again, saying, "Well, I trade whenever. I trade 24 hours a day because I can trade 24 hours a day because the markets are open 24 hours a day." Is that really realistic? Are you really going to be able to do that? You have to really assess. Or if you have a full-time job and say, "Well, I work from 8 to 5, but I also think I can trade while I'm at my job from 8 to 5. Is that realistic? Are you going to be able to really do that? For example, if you're trading a 1-minute chart, is it realistic you could be in your trading chair from 6 a.m. to 6 p.m.? I mean, if you're trading these really short-term instruments or products or, tick charts or short-term charts, are you really going to be able to focus on something from 6 a.m. to 6 p.m.? I've seen people that have that in their trading plan, and they can't even focus for 10 minutes, without getting distracted. So they're actually going to sit in a chair for 12 hours a day looking at a 1-minute chart. If you're trading off the 1-hour chart and you're working a full-time job, can you check on your charts every hour? What about the overnight sessions? How are you handling those? If you're trading something you can carry overnight and maybe you can't put in stops or something else, if you need to check on your trades, if you need to monitor them, how are you going to do that? Your hours of business will be based on your individual circumstances and may change over time. Again, you might start off part-time and hey, I'm getting good at this. I can expand my part-time hours, and maybe hopefully you get into trading it full-time. Well, you're going to update your plan. This is an important section for your feedback loop. If you're constantly missing trades, are the hours of business really realistic for you as a trader? If you're not able, if something keeps coming up and it takes you away from your computer, then you have to look at that. If you're like, oh man, I I missed another bunch of trades because I had to go run out and do this. Then is it realistic what you have in your plan versus what you're actually able to accomplish and do? Are you overcommitting, or are you not actually open for business when you say you're open? It might be one of those two things. Are you getting up in the middle of the night to trade and then falling asleep at your trading desk because you've put in too much time and now you can't focus, or you go in the middle of the day and take a nap because you're too tired and you miss the trades you were really looking to take? Remember, you need to be realistic, and if something is not working, you will update your plan, because this is important to build a solid foundation, especially with your brain, and say, okay, this is what I'm doing. That's part of your target that you're attempting to hit. What days are you open for business? Do you trade, Monday through Friday? Do you trade Sunday nights in certain markets? What days are you open? I know a lot of traders who actually take off Friday, or they might trade Friday morning and they take off Friday afternoon. If that's your case, put it down. In my plan, I do a top-down analysis every Sunday and start trading Sunday afternoon, but I'm also done by 12 p.m. on Friday. That's part of my schedule based off the trades I take, the strategies I use, and the markets I trade. When are you taking time off? Do you trade in August? How about the last 2 weeks of December? There's key times throughout the year that I take it off. Especially when the markets get really slow, a lot of times in the summer, and year-end markets. First of all, I'm too distracted with other things, so it's in my plan the times I'm taking off, and I don't plan on turning on my trading computer during those times for doing my really active trading. If I have longer term positions on, I might say I'm going to check on them and modify my stops and targets once a week, but I'm not actively trading during those times. So that's in my plan. The final aspect of this section is when not to trade. That's just as important when you're trading. Okay? This is related to emotional, physical issues or times when you cannot focus on the markets. I know people who attempt to trade when they're sick. If I have a fever at all or I'm not feeling well, not trading. Because my trading, I've tracked it, and in my trading journal and trading log, which we'll get into, and I realize that my trading, I can't even focus on doing my strategies correctly. My analysis goes out the window. I'm really good at executing trades and following strategies, and when I'm sick, it's not good. So it's in my plan. If I'm feeling sick or have a fever at all, trading computer stays off. If there's an emotional situation or I'm dealing with something, that's distracting me from trading computer's off. It's not worth it. Because I've realized it does not benefit me. So I write it down, because then I'm like, here's my business plan. I don't do trades when this is happening, so I don't turn on the computer. The logistics section also needs to have your rules about account funding and withdrawal. Do you take profits out monthly, quarterly, yearly? If you need to put money in the account, what are your rules surrounding that? Because a lot of traders, I know, you don't put everything you have in your trading account. You might say, I'm willing to risk $10,000, but you might only put $2,000 in the account. All right, but if you're saying you're only going to risk $10,000 and then you hit that, let's say you weren't very successful, you lose that $10,000, and then you go, well, I'll just risk another $10,000. Now you've modified your plan. Now you've changed your plan. You got to look at that. These are realistic goals you have to put down, whether they're for taking profits or losses. How much are you risking? Is that going to affect your lifestyle? Is it realistic? Some people, I'll just pull out money whenever it's in there. Is that realistic? Is that going to help you grow as a trader? Are you trying to grow your trading account? What are your goals to have eventually? Maybe you start off with a $1,000 account, and my goal is to get it to $5,000. But if you're taking money constantly out, like whenever you have winning weeks, are you really going to grow that trading account? Probably not. So you have to get this down. And this can tie in with your goals also, but this is how you're going to grow the account. Let's say, you might pull out only a portion. I might pull out 50% of my profits every month and leave the other 50% in to grow my account, et cetera, et cetera. If you have multiple accounts, how much is in each account? And do you have the same funding and withdrawal rules? Again, there's people who trade many different products on even different exchanges. You know, so they might have multiple accounts. You might start off just initially with Nadex accounts and then eventually add on other accounts on top of those Nadex accounts. There's lots of things you can trade out there. Remember, this can evolve as you become a better trader, but you need to put some rules down that you will follow before you become before you possibly become emotional about your account. The best thing to do this, it's like before you get emotional about a trade, know what your profit target is, know what your stop loss is. The worst time to manage that kind of thing is in the middle of the trade. Same thing with the money going in or out of your account. You should do it when you're in a calm, rational mind, not when you've just taken a loss or had a big win. I just had a big win, I'm going to take money out. That's not the best time to do that. It's better to, that's when you need to look at your rules and follow your rules. All right, in the next major section, we're going to cover market strategies and risk. And you need to know what you're going to trade and how you will trade each market. It also covers the strategies you will use. Finally, it covers the risk management for both your entire portfolio and also within each strategy section. Since many people trade multiple strategies, they need to take into account how they will manage drawdowns in their entire account, as well as consider drawdown rules for each strategy. Let me just get into markets and I'll turn it back over to Bob. So the market section needs to contain information about each market you are trading. It should have the hours it is open. If you're trading equities or equity options, you should know the hours and availability of after-hours trading. If you trade futures market, then we'll have the normal and extended hours as well as the short periods of time they are closed. If you trade foreign exchange, you should know the high volume hours for the individual pairs as they can differ. You should know what's the Asian session, what's the European session, what's the US session. What's most active during each of those sessions. If you're trading Nadex, you should know the various expiration times and spread differentials for the varied products. You should know, what are the different availability for binaries and spreads, the different times. And then you also have to know, because you can trade Nadex, you can trade it against the futures. Okay, you can trade it against commodities. You can trade it against foreign exchange pairs. So you should also understand those markets of not only the Nadex products, but the different underlyings that you're trading the Nadex products against. Okay? So you have those things, and those, you should actually write down what you've learned in your plan. Because you might realize you got something wrong, or you might learn new information, or you might just initially trade Nadex binaries, now you want to get Nadex spreads. Well, there's differences, so put it down in the market sections of your trading plan. All right, Bob, I've rambled on enough. I'll turn this back over to you.
Thanks for that, Mike. And one of the things that I wanted to throw into what Mike just talked about, think about those withdrawal rules and the deposit rules that Mike talked about. And again, I know that a lot of you are sitting out there now going, well, trading plan, I was hoping they would give us a template and we would fill it out. And essentially, this webinar is a template. You think about the withdrawal rules and the deposit rules. One of the main advantages of trading at Nadex is the low cost to open an account, right? You don't have these massive margin accounts that you have to open up like you do in futures or in equities, right? But that can also be one of the downfalls of people if you don't have a plan for how much money you're going to place at risk. Because you can open an account with $100 or $200 or $500, and next thing you know, you lose $100, and maybe your personal financial situation, as mentioned in our risk statement, is such that losing $100 doesn't bother you. So you put in another 100. Maybe you started off thinking, I'm going to trade about $5,000 and see how well I do. And next thing you know, because you could put it in a little at a time, you've looked and you're like, wow, I lost $6,800. How did I do that? What happened? Because you didn't have a plan for these things. So we're talking about real stuff here. We're not talking about just, hey, write a plan. It's pretty good. Write down your strategies. Write it down, what you got to do, where your stops are, and go ahead and trade. This is extremely serious stuff, because this is a business and you are dealing with money and you are doing real trading. The strategy section has a subsection for each strategy that you're trading. So for each strategy, you need to write out the full set of rules. If you can't write it down, you shouldn't be trading it. Now that doesn't mean that your strategy doesn't have room for discretion in it, but you should be able to write down the rules for your discretion. For example, if I'm within 75% of my target and a major economic release is coming out, I'm allowed to take my target at my own discretion. That's something you can write down. The rules should cover what is a valid setup for the trade. What's a valid entry trigger? What time frames do you trade in? And where is the initial stop, and how do you determine where to put it? These are the main components of that. How do you determine your targets? That should be in your plan. Once you are in a trade, do you trail stops? Do you have multiple exits? Maybe you put in your plan, well, my target is expiration. That's fine, as long as that's what you stick to. So now if you have in your plan that 100% of the time, with no discretion, I will hold my Nadex binaries or my Nadex spreads to expiration. That's fine, if that's in your plan. Now, once you are in a trade, do you trail stops? Do you have multiple exits? Or again, is it expirations? If you trail a stop, how do you trail it? Okay, there's good ways and bad ways of doing that, but you need to dictate what your way is. Every 10 ticks, every 5%, every time it passes a major significant level. Whatever those are needs to be written down. Do you have a break-even stop? Do you go flat before major market moving reports, like I just mentioned? Now, you can and should put in screenshots if it's helpful. Okay, you may want to map out a decision tree for entries and exits relating to your strategy. Again, all of this stuff is designed for you to succeed, not to give you busy work. Okay, because again, this is real money. This is a real job. If you are learning a strategy, then each strategy section will evolve as you learn more about the strategy and possibly refine the strategy. Some of the strategies that we teach at Path Trading Partners, we have beginner and advanced sections for the strategy. Once you master the beginner strategy, you might want to add in some of the advanced rules. We try to guide people as good as we can to not put in the advanced rules too soon. But your strategies will evolve as well. And even strategies that you learn, you will make your own. For example, if I wanted to trade the only expirations that have 2 hours left, okay, and now I find a strategy that, wow, I can do some theta capture toward the end of the day. You may want to add that in, and that's how you make a specific strategy your own. You may say, this strategy works really well, I've noticed, to capture theta with only an hour left. So you start to do some research, and then you add it into your plan. How are you going to test that out? Here's a sample screenshot of a flag setup. Okay, here you've got a bear flag. After a down move, consolidation up to the right, entry rules. Flag retraces into multi-bar space, which is something that we teach. We call it a clear path. Move does not close above the 37.5 Gann level. On a break below the significant level, we enter the trade. Here's the significant level. Okay, and you can do this. You can place this particular opinion in binaries or spreads, right? Stop goes above the 37.5% Gann level, which is right here. So we place a stop above it. We choose to place it above this spike high. Upon reaching the 62.5% Gann extension, we move our stop to break even, okay, where you entered the trade. And then we have one target for the trade, and it's the 100% extension. This goes into the trading plan. This is a shot of a trade that was done correctly with all the entry rules there, as well as the exit rules and the reasons for the target. Here's what a decision tree could look like. Again, this is a sample. This is a strategy we teach, but that's not important. Okay? Is there a potential double bottom top within a valid sweet spot on the second leg? If the answer is no, then you default to no trade. If the answer is yes, then you go to question number 2. Is there a valid significant level in the pattern? If the answer is no, again, you default to no trade. If the answer is yes, you go to the next question. Is the 200% target beyond the move that created? If the answer is no, you double check the reward to risk, and you have a second leg of the tree. If the answer is yes, you move on to here. Is the 175% target beyond the move that created the double top? If it's yes, then it's no trade. If it's no, then there's a second target to trade. Follow the arrow and return to the prior step. So these both lead to here. Is risk reward greater than 1-to-1? Yes. Has a third leg entered? No. There's no trade. And it continues on until you get to the end where you either enter the trade, and it describes what the trade is, or you reach no trade. This actually becomes a very fast process. But without this being written out in the beginning, okay, you have to manage all of this for a very simple high probability strategy that we teach. All of these questions. all of these answers have to be taken seriously and answered correctly before you can decide whether to enter the trade. And depending on the time frame of your charts and the amount of time before you've actually seen this trade develop, how can you do this? How can you do this in your head? You are bound to miss spots. Maybe not every time, maybe every time. But in that one trade, let's say you do this without a decision tree or without a screenshot, and you have no trade plan and no log or journal, again, that we're going to talk about next week. How do you even know what you did wrong if you don't have the rules written down? What if you got in a trade incorrectly and it went to profit? You know what's one of the worst things that can happen to a trader? Getting rewarded for bad trades, getting rewarded for bad behavior. Yes, it is true, as crazy as it sounds, that the result of the trade does not decide whether it was a good trade or not. It's actually not that way. It's whether or not you took a high probability trade. You can take a trade and lose money and have it be a good trade. You can take a trade and make money and have that be a terrible, completely inconsistent, and irresponsible trade. And I'll give you an analogy. If I need to be somewhere and I decide to do 150 miles an hour on the shoulder of the highway when there's construction going on, but I don't hit anyone, and I don't get a speeding ticket, and I don't get a driving on the shoulder ticket, but yet I get to my destination on time. Was that a good way to drive? Of course not. Of course not. You got to where you wanted to go, but it was complete lunacy to do it that way. Okay, that's what I'm talking about when I say that you can have a bad trade that made money and a good trade that loses money. It's about the consistent actions. It's about the long-term success that we talked about when we described our company. In each strategy section, you will also put in a section about how much risk you will take per trade. This also goes back to will you deposit more when you're talking about Nadex, right? How much risk per trade will you take? Now this might vary for each strategy, which could be based on intraday versus daily, long-term versus short-term, and there are weekly binaries, right? Historical past performance, and you'll also have a separate section just covering portfolio risk. How much risk am I going to take across the portfolio? How much risk am I going to put into my binary trades, into my spread trades, and into anything else I'm trading, and as it relates to the entire portfolio that I'm trading, the entire amount of money that I've decided to place at risk? How does it apply? The portfolio risk section will contain information about how you're managing the risk of your entire portfolio. Yes, if you've decided to actively trade, you now have a portfolio. If you're only trading one strategy, then it will be the same as is covered in the strategy section. You should still create it, however. All you'll be doing is taking Xerox copies. I'm showing my age by saying Xerox, right? You'll be taking a copy of the strategy section and just putting it into the portfolio risk section. Why should you do that? Because you will eventually trade multiple strategies if you're serious about trading for more than just augmenting income or paying for a vacation, or maybe you just want to trade enough to make your car payment. However, most traders trade multiple strategies. How will you handle drawdowns on a daily, weekly, and monthly basis? Do you have daily and weekly and monthly cutoff drawdowns? Okay, do you have a per trade cutoff? All right, I've done this particular strategy. I've lost X amount today. I'm done with this strategy. In the entire portfolio, I've lost X amount this week. We are shutting down for the week. We are shutting down for the month. Do you have those rules? Do you feel you even need those rules? Right? I see your questions, guys, just so you know, and we'll get to those at the end. Okay? Trading psychology and education. This section includes anything related to trading psychology and further at trading education. If you're just starting out with trading, the psychology section will evolve as you gain more experience in trading. This section includes areas that you need to work on to help you become a better trader. Things like emotions, patience, overtrading, undertrading, fear and greed. Okay, there is a such thing as undertrading, right? You get scared. If any of you were in one of our prior webinars where we talked about what we call a true trader's outlook, okay, a lot of the times what traders will do is they'll take a trade, it'll lose, and then they'll be afraid to take the same trade on the same strategy the next time it appears. That's called undertrading. By putting your various challenges in writing, you acknowledge them, and work out how you will address them. That's the issue. That's the main thing about a trading plan. That's what people forget, and that's what people don't realize. If you don't have it written down, how can you review it and improve it? Are you serious about wanting to trade or not? Education is also in this section because many times things that are uncovered in trading psychology lead the trader to seek more education from individuals experienced in the areas that are challenging for the traders. Traders may start trading a short-term scalping system and realize they are really geared to be a longer-term trader, or vice versa. Traders may realize that they need to work on their anger or fear and seek out resources or a trading coach to help them with that aspect. That's why this goes into this section. This section may also contain longer-term trading goals relating to trading education you want to pursue or other markets you want to trade. Maybe you say, after I make X amount, I'm going to take this course that's just been way too expensive but I've heard so much about. Or maybe you're going to say, I'm going to save up X amount of money and go intern with a trader, and I'm going to live off of that money. All of that goes into this section. It can contain other strategies or market analysis techniques that you want to learn, and any books that are on your reading list should go into this section. Now, an optional part of your trading plan. Many people put in profit targets in their trading plan. They might put in daily, weekly, and monthly trading profits. Now, personally, we do not put this, or I do not put this in my plan. Okay? I've found that I might try to force trades to hit goals based on arbitrary time frames. Okay? So for example, I lose $200. I have my daily trading goal as $500 a day. Okay? Now I think to myself, wow, now I got to make 700. Right? I lose another 50. It's like, wow, now I got to make 750 to reach my goal. Okay, the daily goal isn't as important. What I've actually told traders in the past is that when you're getting started, make your plan to trade every single good trade that you see, and at the end of a month, or at the end of 2 months, or at the end of 3 months, you want to be break even. I do not recommend putting profit targets in early on in your trading career because they become another source of pressure. What your goal should be is to take good trades. Trading is a real job, but unlike a 9-to-5, daily, weekly, and monthly income can vary. If your plan focuses too much on short-term profit goals, this may lead to forcing trades and over-trading. If you think that this section is beneficial for your style of trading and your trading mindset, then please include it in your plan. But I seriously want to really recommend, very, very strongly, that you think hard about that. Because when you put those goals in and you miss them, even on a weekly basis, let's say you want to make 500 a week. Say, I just want to make 500 a week. All right? And then the first week you lose 400. Now you're thinking, wow, next week I got to make 900. That's another source of pressure. So be very careful about that. Now, your trading plan is done. Now what? Well, this gets back to the feedback loop that we covered earlier. Your trading plan is your rule book or playbook that you are following to establish and operate your trading business. Your trading plan is not static. Mike mentioned that. We're going to say that more than one time. It will evolve over time. In the beginning, you'll want to review it at least on a weekly basis. Don't read Barron's on the weekend. Don't read the Wall Street Journal. Review your trading plan. Focus on that. Don't worry about what some editor says about where the market should be, or what some analyst says about what's going to happen in the market. Read your trading plan. See what you did right and what you did wrong. Over time, you'll need to update it less and less. However, if you learn new strategies or branch off into new markets, then you will update your plan with that information and may begin to update it on a regular basis. Besides the obvious things, how do I know what to update? Well, this is where the next two tools that come into play, the trading journal and the trade log. Now, we'll talk about those more next week, but let's take a look inside of a plan. Okay? Here's a Path Trading Partners trading plan. We talked about a template. Okay? This is sort of what one would look like. You've got a table of contents. Okay, it's an actual binder. You should have this on your shelf or on your desk. All right? Here we've got the Nadex account. Here you've got a little motivational thing. You can't hit a target you can't see. And we've got a table of contents, goals and objectives, logistics, markets, strategies, risks, trading risk and portfolio risk being a subset of that, trading psychology, and trading education. Okay, goals and objectives. My eventual goal is to be a full-time trader, but I'm aware that this will take time, discipline, and hard work. Short-term goals. In the next 3 months, I will take every valid setup in my live account for my long-term strategy. By month 2, I will begin 2 new short-term strategies in demo account, and so on. Logistics. Mike talked about this. Help desk number. Contacts is Joey Bag of Donuts. Little homage to my heritage. Broker account numbers, right? Work hours, okay? Here's what you do in those particular work hours. 6:15 to 7, I draw my trend lines. 7, I get an espresso and breakfast. This obviously is a sample done by me. Deposits and withdrawal. Deposits will be made on the 1st of every month if necessary to cover potential trades. Withdrawals can be made on a monthly and cannot exceed 50% of the profit made until 1.5 times maximum profit margin has been reached. Markets, Euro futures, gold, NYMEX crude and minis. Insert specs and hours of each contract. Strategies, flags. Here's the rules of it. See screenshot on the next page. Okay, doubles is one of the strategies. See decision tree on the next page, right? Related trades, products, charts, time frames. Adjusted double strategy, products, charts, time frames. This is what it should look like. Risk. This is not a recommendation. Okay? I got to stress that. This is not a recommendation for what your risk should be. Okay? Everybody heard that, right? Trendline trades, 1% of account balance, minus daily 2% stop loss, 6% weekly stop loss. Rotation trades, 3% of account balance, same thing, 6% daily stop loss, 12% weekly stop loss. Adjusted doubles, 5% of account balance, 10% daily stop loss, 15% daily stop loss. Now again, sample, not a recommendation. Look how much you could lose in a week, right? You've got a grand total of about 33% here that you could lose in a week in this particular strategy or this particular portfolio risk. That's a lot. Psychology, stick to my plan. The plan is the target. When I want to enter early, do 10 push-ups. When I want to exit early, do 15 sit-ups. When I prematurely move my stop, eat a can of tuna for dinner. These are the kind of things, it sounds crazy, but these are the things that help you stick to your rules. And sticking to your rules is where the long-term success comes from. Even if you don't have the best strategy, okay? Even if you don't have the best strategy, if you stick to the rules of the strategy, you can fix it because you have results to fix it from. Read 3 pages of Trading in the Zone per night. Trading in the Zone is one of my favorite trading books, by the way, by Mark Douglas. Take Mike Arnold's Market Internals class next semester. All right? Online course in Excel spreadsheets for better tracking, starting November 1st. This is sort of what it should look like. All this is an example. Again, I'm going to stress again, these are not risk recommendations. They're just an example. So in this lesson, we reviewed all the components that we feel are necessary to put in your trading plan. People always want a template. Essentially, we gave you one. A trading plan is an evolving document. It has numerous sections in it that describe how you are running your trading business. This is a business. Some traders may feel a bit overwhelmed by all the information in a well-formed trading plan. The important thing is to start writing it. Okay? What's the important thing in a workout plan, a weight loss plan? Day 1. Just start. Get started with it. I don't care if you don't finish your trading plan for 8 months. I really don't. As long as you start one and stick to it and write it. Okay? It's just like anything else. You don't need to sit down in one session and complete the whole thing. Any more than your weight loss plan is going to happen in 1 day or 1 week or 1 month. Okay? Think about that. Think about having a plan. Think about the people you know that have been successful in a weight loss plan. Did they go into it and say, today I might eat this, today I might eat that? Or did they have an actual plan that they stuck to? Was it about consistency and long-term goals? Okay, being achieved by short-term statements. That's really what it is. So if you got nothing from us today, please get into your heads and decide, I'm going to write line 1 tomorrow. Or I'm going to write line 1 Saturday. And I'm going to start building from that point. Okay, that's really the important thing we're trying to get across to you guys. Please follow us on Twitter at @path_trading. Like us on Facebook. You can visit us at Path Trading Partners. Sign up with us. There's a lot of free stuff there you guys can look at. And please, my favorite thing, again, listen to our podcast, The Money Path. We talk about a lot of this stuff related to a lot of different markets. And all of our blog articles can be found on Path Trading Partners as well as at binaryoptions.nadex. And again, all of our prior webinars are archived on the Nadex site. You just go to the new nadex.com, go into the Learning Center, and look for archived webinars and look for our logo to find out some of the stuff we've done before. We gave you that hint to go to the prior psychology webinar. This stuff is really important, guys. So we're going to stick around for questions on this. And again, please don't feel overwhelmed. But if you're serious, you have to do this. If you're just messing around, don't worry about it. You don't have to. But if you're serious about making money in trading at whatever level you want to make it, okay, you have to do a trading plan. You have to do some form of trading plan. We'll go into logs and journals next week at the same time. It'll be Tuesday, 5 o'clock Eastern. Got 2 quick questions. What should be the plan to add funds to a trading account? So here's the thing, Jim. If you remember our risk statement, right, personal financial situation, we have no idea what should be your plan to add funds to a trading account. We really don't. Because it has so much to do with your own situation. You have to decide, how much am I going to risk on this trading thing, right? And then you have to have a strategy in place. You have to take some of those funds and think, how much of it's going to go to education, if any? Or am I just going to dive into live trading? And then you can say to yourself, what's the minimum risk I'm going to have per trade, and what's the minimum risk I'm going to do per day, and how much money do I need in the trading account of the money I've set aside to trade, right? So really, this particular webinar that we've just done is as close as we can come to giving you guys everything you need to write your own. But we simply can't write it for you. We just simply can't do that. So, Camille says, how do you feel about binary signals? Personal opinion only, not disparaging anyone else. I hate them. What if the person who is giving you the signals get hit by a bus? Your career's over. Can't trade anymore. Right? Just hate them, personally. I think you should learn how to trade. Right? Give a man a fish, he eats for a day. Teach a man to fish, he eats for a lifetime. That's my opinion. Not disparaging anyone. I don't know who you're talking about, and I don't care to know. But I think you guys should learn to trade on your own. You should learn to generate your own signals. Is there a plan to trade with a full-time job? Again, Mohammed, it's going to be your plan, right? How much are you going to risk? How are you going to build your way there? And how does it affect your personal financial situation to do that? Right? We just can't do that. So we just can't we can't say to you, here is, the way that you will follow to get to a full-time job. How much do you need to live? How much do you need to pay your bills? How much do you have to invest in this? How much can you invest in education? Right? Joey Bag of Donuts. That's not a question. Okay, that's funny though. Gary liked Joey Bag of Donuts. All right. Could you give a flash answer to my previous question? Can you clarify the difference between trade journal and trade log? Yes, we can, Enrico. And this is important. And we're going to do it in the entire webinar next week. So make sure you're here next week, but I'll give you a flash answer. Your trade log is a log of your trades. I bought the 1950, 2050 US 500 spread today at $37, and I sold it at $68. 4 times, here's my profit. That's your trade log. Okay? Your trade journal is, my dog was barking in the background making me nuts. A non-farm payrolls number came out weak today, and that screwed up the trade I had intended to place. Janet Yellen spoke surprisingly during one of my trades, and that's why it went to loss. I now realize that I can't trade on Fridays because I'm thinking too much about scotch. Right?
It's also stuff like, saw it getting close to my stop. Let's say I got in a binary at $45. I said I'd exit if it got down to $25. It got down to $30, and I exited even though it didn't hit my stop price. I exited early. Or I was going to take profits when my entry at 30 got to 80. It got to 60 and I took profits early, or it got to 80 and I got greedy, and I thought it would just go to full value, and I didn't take profits, and then it actually went down, and I had to get out where I entered. All those things, like it's going to be a complement to what trades. It's really what was going on at the time when you were putting on the trades that are in your trade log. So it's the sort of, not just, we tend to forget, we put down our trades in our trade log, or we have them generated automatically, and then we don't remember anything else about them because, we didn't take a journal, we didn't make notes, we didn't note what was affecting us, whether it be psychological stuff, we didn't note what was going on in the markets, we didn't note maybe your phone was ringing, or you got bad news and you started messing up all your trading, or something was happening. Those are the kind of things, because when you're reviewing your log, you're going to want to put it in context. Context gives you a lot of information. You have that story about the guy with their dog barking.
Yeah, so I was a risk manager and a proprietary trader instructor at a Chicago prop firm. We had offices at the old CME building on Wacker. And one of my guys that reported to me, one of the 25 or so traders that reported to me, basically asked me, he said he was doing really well, and he asked me if it was okay if he started to trade from home, because he wanted to move to California and trade from home. And he had only traded in the office. I said, sure, no problem. So he started going home 3 days a week and trading from home. Now, I made a comment earlier that applies to this story. For some reason, when he traded from home, he traded much worse than he traded in the office. And later on, he realized, through reading his trade journal, looking through his trade journal, that he was writing this down. He was saying, lost another trade. My dog's barking and it's driving me crazy. Entered a trade too early. Why won't that dog shut up? Missed a trade. What is the dog barking at now? There's no one even here. He kept putting in comments about his dog, and they corresponded almost one-to-one to his losing trades. He ended up moving to California. He still lives there now. I speak to him once in a while, and he's doing great. But he trades from his garage, and he leaves his dog in the house. That was one of the things that was bothering him, and that's one of the things that goes in your trade journal. You would be surprised what affects your trades. And that's why everything goes into your trade journal. I don't like trading in this shirt can go in your trade journal. All right, now, some of this might sound silly, but when you're reading your stuff and reviewing your stuff and you start to see correlations, right, maybe that particular shirt is binding and you end up throwing your arms up in the air to loosen the sleeves before you click the mouse. Who knows? I mean, it's crazy stuff that can affect a trader. All right, and you know what? If you're superstitious and you're successful, we back traders here at Path Trading Partners. I don't care. You can be as superstitious as you want. But those things are discovered in your trading journal. I don't think we missed any questions here. Young Lu is asking if we could send the recorded session. It'll be posted at Nadex.com. You guys want me to show you where they get posted? And I'll show you guys where while we wait to see if there's any more questions. All right. Here is where they post them. Let's see. All right. Thank you for that, Oscar. Appreciate it. So if you see, I'm at nadex.com right here. You go into the Learning Center, and you go down past resources to webinar archives. Okay, and these are the most recent ones. And then you just look for our logo here. And again, the title of this one is Building Your Trading Plan, Part 1. And next week, we're going to do Part 2. Okay, so next week we'll do Part 2, which will cover the question of logs and journals in great detail. Okay? All right, now I'm just seeing compliments, not questions, and thank you for the compliments. But I think we're going to wrap it up. Thanks to Nadex as always, and again, just showed you guys where the webinar recording will be. Please listen to our blog, our podcast. It's at iTunes. It's also available on Android, and you can find it on our website as well. And again, just sign up for all our free stuff and check us out on Twitter, Thanks again to Nadex. We will talk to you guys next week. Cheers, everybody.
Thanks, everyone. Have a great day.